Okie dokie. Alright. This will be my lesson for you guys. Alright. So this is the Braindead session liquidity sweep. We look at Asia high and low, London high and low, and in a nutshell, we look for a reversal off of those. Oh, and previous day high and low. Okay, let's get into it. First off, all our times will be in New York time. Any time I say is on New York time. UTC -4. Don't quote me on that. Stock market opens at 9:30 Eastern time. Okay, New York time. That's what the market runs off of. That's what we're going to be talking in. When does this strategy work best? I like it the most. I see the best results on Tuesdays and Wednesdays. It also works really, really well on Thursdays, but it works every day of the week. You're not going to get a trade every single day, but it doesn't matter. You know this works, and you're going to get great trades. You don't need a trade every single day, and you honestly shouldn't. Some really cool things about this strategy. There's no daily bias required. You don't need to wake up. You don't need to have any. You don't have to think at all, pretty much. It's literally completely mechanical. It's so simple. And all you need is a 1-minute chart. You don't got to look at anything else. You don't got to distract yourself. Nothing. Okay? And it's completely mechanical. There's no emotional aspect at all. Okay? We start looking for our trade at 9:30 a.m. Eastern time when the stock market opens. Okay. Things we need to mark out on our chart. We have Asian session, which is from 8 p.m. to midnight. We're going to mark the high and low. London session kill zone, we mark from 2 a.m. to 5 a.m. We're going to mark the high and low. And then just the previous day high and low on your chart. Just draw a line out. Okay. Things you need to know already for this strategy is you need to know what a fair value gap is. That's it. You need to know what a damn fair value gap is. Okay. Watch a YouTube video on it. Super simple. I'll explain it a little bit in this video. If it doesn't help you, then just watch a video. There's thousands of them. Okay. Very, very simple. And what do we do now that we have these session highs and lows drawn on our chart? We stay on that 1-minute chart and we wait for this level to get hit after 9:30 by one of these fair value gaps. It has to get hit by the fair value gap or there's no trade. Okay? If this happens, then we wait for this fair value gap to become an inversion fair value gap, and I'll explain that later. Our entry will be a limit retracement back into that inversion fair value gap, and our stop loss will be above candle number 2, the high of that fair value gap, or the low, depending if you're bearish or bullish, candle, the high or low, that wick. And our take profit will be either 2 risk reward, or you can hold until the next key session level for a big RR win. All right, backtest results through 2 years of data. I think it was 2022 and 23. It was with just this completely mechanical, no thought whatsoever. It was a 77% win rate, 3.14 average risk to reward. Okay, and some bonus tips before we get in is on Tuesdays and Wednesdays, because these are my favorite and the best days, I like to just mark the most extreme session levels, so the most extreme high and low. So, for example, it could just be Asian low and London high only. I only have 2 lines on my chart instead of 6. The highest high and the lowest low. I'll show you that today. Okay, let's do some examples now. Okay, this is Wednesday. This is today. Let's just get rid of all this stuff on the side. Okay, so first step, we wake up. It's around 9:30. Okay, we're gonna go back over here. We're gonna mark our ranges, 8 a.m. to midnight. That's Asian session. Okay, we draw out the low, take it to 9:30. Draw out the high, take it to 9:30. Okay, but it's Tuesdays and Wednesdays. I only like to do the lowest low and the highest high. So that's what we're going to do. Okay? There's would be London low right here. This is London high. I drew out London high. All right, now it's 9:30. This is our vertical line marking 9:30. We wait. What do? We wait for this level to get hit. Hit by what? By a fair value gap, right? Okay. Does that happen here? First off, sorry, let me explain what a fair value gap is. Anyone who doesn't know. Okay. Fair value gap is a 3-candle pattern. I'll draw a bullish one. So here's candle number 1, all right? And then we're going to have another candle. We'll have candle number 2 right here. And then we'll have a third candle. Keep going up. And it'll be like this, candle number 3. Okay, there's our wicks. So what makes it a fair value gap is there's a gap, a fair value gap between candle number 1 and candle number 3. 1, 2, 3. Okay. Candle number 1 and candle number 3. There's a gap. This wick and this wick do not touch each other. There's a gap. So all of this stuff in here is the fair value gap. Okay. So we could draw a rectangle between these levels, and that's our fair value gap. Okay. So say our key level's up here. Okay. Now that we hit it with the fair value gap, we want price to come back down, and then we close below this fair value gap. Okay, we close below it, and then we want to come back into it, and this will be our entry, and then our stop loss will be above the high of candle number 2. So our stop loss would be right here. Okay, that's our stop loss. Stop loss. Okay, and then we just want price, now that we're entered, to run away. And we run away to the next key level. Okay? Sorry, let's exit. Next key level. Okay, that's simple. Simple, simple, simple. That's what a fair value gap is. If that didn't make sense, go watch a video on it. Okay? I'm sorry. All right, now we mark our 9:30 time. That's when we start looking for a trade. No earlier than 9:30. Okay? Also, no later than 11 o'clock. Typically, you kind of want to be done. An hour and a half window to trade. Okay, so we wait for our level to get hit. We hit it pretty much right at a 9:31. We hit this level. Did we hit it with a fair value gap? Yes. This candle number 1 and candle number 2, they don't touch. You see that? There's a gap in the wicks. So we're going to draw this out. Extend it. Now we wait for it to become an inversion fair value gap. We wait for a close below. This candle right here, this 10 a.m. candle, closed below it. So now it is an inversion fair value gap. Make it orange. Alright, so now our entry will be the start of this fair value gap, the box. Our stop loss will be the high of candle number 2. And then we target for our TP either 2 risk to reward or whatever you want. And then our final TP could be the next key level, which would be the Asia low. And this would be a beautiful 5.6 R trade. And we hit that in 9 minutes. Alright. Trade example number 1. I'll zoom out. Here we go. You have London Asia low here, London high here. We hit the London high with the fair value gap. We just wait, sit here until this fair value gap becomes inverted at 10 a.m. Wait for a retracement and then run lower. All right, beautiful, beautiful example today. All right, now we'll go to Tuesday. Tuesday, right here. Okay, here's a 9:30. Now we're gonna go back because it's in the morning, and we're gonna go mark our high and low. All right, it's Tuesday, so we're only gonna do the most extreme again. Extreme high and low. So 8 p.m. here, and then we have midnight here. We mark the high, which is Asia high, and the low, Asia low. Now we have 2 a.m. to 5 a.m. for London session kill zone. Mark the London low and the London high. I'm only doing the most extreme of the two because it's Tuesday and I like to do that. Okay. Now we get to 9:30. We wait for one of those levels to get hit. As you can see, the level never gets hit. So there's no trade. Now there is ways to know why this level never got hit, like this fair value gap, for example, and this order block, but and equilibrium, but it doesn't matter to this strategy. We're sticking strictly to the mechanical, so you can't fuck this up. You are guaranteed to make money. And you can be a millionaire with this shit, okay? That's all you have to do. So Tuesday, no trade, no big deal. You got a 5-hour trade on a Wednesday. You could honestly be done for the week. Now, we'll do Monday for our last trade. I'm actually going to get rid of all this and do this with you so you can see me do it and learn like as I do it with you. Okay, I'll even get rid of these lines. All right, so let's pretend that we're waking up at 9:30. 9:30 is here. Okay, so replay mode, 9:30. We'll draw this line at 9:30. That's when we're going to start. You might want to wake up a little bit earlier to look at the charts, obviously, and do all your prep, like marking your levels. So now we have 8 p.m. for Asian session, 8 p.m. to midnight yesterday. We're going to mark the high and the low. Now it's Monday, so we're going to mark all of them. So I'm going to mark the high, or the low, right here. Draw it out to 9:30. Label it London low. If you don't have those presets enabled, you could add them. First of all, I like to do that. It makes it easy. Or you could just hover over it, click on it and hover right here, and type London high. Alright, draw this out. Okay, now we have 2 a.m. to 5 a.m. for, sorry, this is Asia, Asian high, and Asia low, because that's 8 p.m. to midnight. Okay. Now 2 a.m. to 5 a.m. we have London low here. I'm not gonna, no, whatever, I'll do it. It's not gonna get hit, obviously, but then London high. Okay. London low, London high. And now we have our previous day high and low. I'm gonna go on the 5-minute chart so it's easier, or I'll go on the daily. Just make it simple. Okay. So the previous day high and low, we're just gonna look at this previous day candle, which would be here. We mark the low. Wait. Sorry. You can't do that on Monday because of the Sunday change. So just do it on the 5-minute chart. It'll keep it simple. So yesterday we'll mark, this is midnight right here, and we'll mark the most previous midnight before it. Which, oh, sorry, never mind. So this is midnight right here for Monday. That's when Monday starts. And then this is midnight from Friday, because that's the end of the trading week, okay? We'll mark the high and the low between then. Here's our previous day low. PDL for short, previous day low, and previous day high is right here. Okay, previous day high. Now that we're done, we'll go back to the 1-minute chart, and we're going to look for our setup. Okay, Asian high got hit right at 9:30. Does it make a fair value gap? Yes, it does. You can draw this out and wait for it to inverse. But you will see that we're just going to keep going up because it's stock market. And we hit into our previous day high, like so. And now that we hit it, do we hit it with a fair value gap? Yes, check mark. Okay, draw it out. Next step, wait for it to become inversion fair value gap. It does right there. So now we would wait for a retracement into it right here. Our stop loss would go where? Above candle number 2. And then we can target either a 2 risk to reward ratio or the next key level. Or, if you're better, any obvious high or low, like down here for a 7R, you could target this high of this breaker block. Just to get more technical, if you want to improve this strategy and make it better. So you can get bigger wins when you know you're going to get a big win. Alright? But we'll just go to the next key level to keep it simple. That's still 4.48. That's amazing risk to reward. Alright? So I can't wait for the limit order on this stupid replay mode, so we're just going to enter here. And we'll target there. Alright? And now we just sit and wait. We can leave the charts if we want. Alright? I would recommend taking a partial at 2 risk to reward, just for your psychology and your mindset. That way you know you've made profit, you've won something. Because if you take a partial at half, if you take 50% of your trade off at 2 risk to reward, you don't even have to move your stop loss. Even if you lose after that, it's a break-even trade. So you're okay. But that's all up to you. So now we just wait for this level to get hit. And just like that, it gets hit. That would have been a 10-minute, sorry, what? Okay, right here, it would have been a 9-minute trade. Alright, 9-minute trade for 4.59R, 100 points. Not bad, not bad, not bad. Now, it says a crazy marker right now. It's not always going to be 100 points, but the risk to reward is what matters, okay? So there you have it. That's our final trade. You see, Monday was actually the best out of all the days. It's not always going to be Tuesday and Wednesday and Thursday. They all work. Fridays I would say are the toughest because there's a lot of other stuff on Friday that can affect the market than just session highs and lows. Such as 70 or 30% retracement or 70% trade retracement of the previous week and whatnot, but it doesn't matter. It'll still work. You'll still have a high win rate with it, okay? So yeah, that's it. To sum it up, super quick recap, okay? Mark your session highs and lows. London high and low, Asian high and low, previous day high and low. Wait for it to get hit after 9:30. We hit our level. Make sure it gets hit with a fair value gap. If it doesn't, there's no trade. We hit it with a fair value gap, draw it out, wait for an inversion, retrace, stop loss, candle number 2, and then run lower to the next key level for 5.6R, and you're done. Honestly, you could do this once a week, and you're a happy camper, okay? That's our Wednesday trade. Beautiful, beautiful, beautiful. Okay? Yeah, that's it. Wait, what? Did I skip Tuesday's price action? Oh no, Tuesday was no trade. That's what it was. Okay, so great. So out of these 3 trades we looked at, Monday, Tuesday, and Wednesday, which is really all you need out of the week, we had 2 out of 3 wins for a total of, we had a 4.49R on that day, 0 trades on Tuesday, and then a 5.6 R. So 4.5 R and then a 5.6. That's a 10.1 R week. So if you risked $1,000 total this week, $500 each trade, you would have made $5,000 in 3 trading days, technically, I guess. Okay, that's pretty damn good. With how simple this strategy is, 1 trade a day, it's all you need. Literally, it's robotic. You can't mess it up. If you fuck this up, I'd be embarrassed, alright? Unless it's your emotions. You can fuck it up with your emotions, I guess. But if you follow this strategy, it's gonna work. And that's all there is to it, alright? Hope you enjoyed. Hope this helped. Yeah, later.